Imagine this. You have $100,000 to invest, and your goal is to grow it into a fortune. Two ETFs promise incredible potential, QQQ and QQQM. But which one will turn your $100,000 into life-changing wealth? The answer may not be what you think. Stick around because this choice could determine your financial future. Let's start with the basics. Both QQQ and QQQM track the Nasdaq 100, an index filled with tech giants like Apple, Microsoft, and Nvidia. They offer exposure to some of the most innovative companies in the world. But here's the twist. These two ETFs aren't identical twins. They have key differences that can make or break your investment strategy. QQQ, also known as the Invesco QQQ Trust, is the veteran. It launched in 1999 and is one of the most actively traded ETFs in the world. QQQM, on the other hand, debuted in 2020 and is designed specifically for long-term investors. So, which one is the better option for your $100,000? Let's break it down. Liquidity versus expense ratios. First up, liquidity. QQQ is a beast when it comes to trading volume, averaging billions of dollars in daily trades. This makes it ideal for institutional investors or anyone looking to trade frequently. But here's the catch. It comes with a higher expense ratio of 0.2%. Now, QQQM flips the script. With a lower expense ratio of just 0.15%, QQQM is designed for buy-and-hold investors. Over decades, those savings in fees can really add up, making it the more cost-efficient choice for long-term growth. Asset allocation and top holdings. Both ETFs have identical holdings because they track the same index. Their portfolios are tech-heavy, with around 50% of their weight in technology companies. Giants like Apple, Nvidia, and Microsoft dominate the top spots. But don't forget, this concentration in tech is a double-edged sword. While it fuels high returns in bull markets, it also exposes both ETFs to significant risk during tech sector downturns. Diversification within the Nasdaq 100 is limited. Performance analysis. When it comes to performance, QQQ has a longer track record, showing stellar returns since its inception in 1999. Over the past 5 and 10 years, QQQ has delivered average annual returns exceeding 15%. QQQM, while newer, mirrors QQQ's performance because it tracks the same index. Here's the bottom line. Both ETFs have similar growth trajectories. However, QQQ's longer history provides reassurance to those looking for proven results, while QQQM's lower fees make it more efficient over the long term. Dividend yields and growth rates. Let's talk dividends. QQQM offers a slight edge with a yield of 0.63% compared to QQQ's 0.57%. But here's where it gets interesting. QQQM's dividend growth rate is an impressive 16% annually. This makes it a great option for dividend reinvestment and compounding over time. Think about it. If you're reinvesting dividends, that growth rate can supercharge your returns. QQQM is tailored for investors who want to make their money work harder through compounding. Investment projections. $100,000 over 30 years. Now, let's put this into perspective. Imagine you invest $100,000 in each ETF and let it grow for 30 years. Factoring in historical returns and dividend reinvestments, QQQM outpaces QQQ in total dividend income. But QQQ edges out in capital appreciation, resulting in a slightly higher total value. So, it boils down to your investment goals. If you're aiming for maximum growth, QQQ might be your choice. But if you want a balance of growth and income, QQQM offers incredible value for long-term investors. Which ETF is better for you? Here's the million-dollar question. What type of investor are you? If you're an active trader or someone who prioritizes liquidity, QQQ is your go-to ETF. But if you're in it for the long haul and want to maximize returns through lower fees and dividend reinvestment, QQQM is the smarter pick. Personally, I lean towards QQQM for its cost efficiency and growing dividends. But remember, there's no one-size-fits-all answer. Your financial goals and investment horizon should guide your decision. Why these ETFs matter in today's market. In today's volatile market, finding stable, high-performing ETFs is more crucial than ever. QQQ and QQQM offer exposure to innovative companies driving the future, from artificial intelligence to cloud computing. But the question remains, how do you want to grow your wealth? Both ETFs give you a front-row seat to the future of technology and innovation. The choice between them is less about which is better and more about which aligns with your vision for financial success. Your financial future is in your hands. QQQ or QQQM, whichever you choose, the key is to start investing now. Don't let analysis paralysis stop you from building wealth. The earlier you act, the bigger your gains will be. So, what's it going to be? QQQ or QQQM? Let me know your pick in the comments below. And don't forget, hit that like button, subscribe for more investment insights, and turn on notifications so you never miss a life-changing opportunity. Thank you for watching. Remember, every dollar you invest today brings you closer to financial freedom tomorrow. Choose wisely, and I'll see you in the next video.